I'm Raphael. I'm one of the founders of Alice and the CEO. And what I'm going to be talking about today, if I can stand here, is our new social DeFi protocol. So just a quick raise of hands. Does anybody know Alice already? Okay, cool. So for people who know us, you'll see there's a bit of a change to what we're doing. For those who don't, welcome to the Alice world. So to start off with, the problem that we're trying to address is that there's literally trillions of dollars that's spent on social and environmental projects every year. When I say trillions, it's about donations is one thing, grants is another, impact investing, all that amounts to about $1 trillion. But then if you start looking at actual public spend on social programs and things like that, that gets into the tens of trillions of dollars. So it's about 20% of OECD GDP is spent on social programs. And it all really adds up. And if you look at, so I'm sure you're familiar with the sustainable, hi there. All right, come in. I just started. You're not missing much. I was just saying there's tons of money that's spent on social environmental projects every year. And still, all those trillions aren't enough. The UN estimates that there's another $7 trillion that needs to be invested every year in social and environmental projects to reach the Sustainable Development Goals. And so the question is, with all of that money, we're not getting to where we want to go. And we're not even sure if all that money is actually helping at all. So this is a picture from the earthquake that hit Haiti in 2010. Don't know if you remember that one. It was like something like 3 million people were affected, 200,000 homes that were destroyed. And the American Red Cross raised about $500 million in donations. And the aim was, so it was like this huge global campaign, and the aim was to rebuild homes, get people to back into homes and rebuild everything. And you fast forward 5 years, and I don't know if you caught that one, but it turns out that when people went and investigated on the ground to see how many homes had been built, there were 6 permanent homes that had been built. That's it, with $500 million. And it's not that I've spoken to quite a few people at the Red Cross, the American Red Cross, Canadian Red Cross, etc. They obviously did stuff with that money, and there were loads of mitigating factors, but the bottom line is that we don't quite know. Actually, there's evidence to prove that they just didn't achieve what they wanted to achieve, which obviously just creates all kinds of trust issues. But it's not only that, is that the problem is that there are no incentives really for anybody to track the impact that they're making. And I'm not talking about tracking the money, because personally I don't really care about how much the CEO gets paid or how much is spent on admin or versus the front line or anything like that. What I'm interested in is the actual impact, like how many lives have been improved, what's been rebuilt, and all the rest. And just either the data isn't collected, or if it's collected, it's completely siloed, or it's unreliable. And that affects small donors like you and I, because there's a trust issue there where we're donating to something, we feel like the money is going into a wishing well. But it's actually a huge problem for institutional funders as well. So more and more, they're asking for evidence-based approaches. But that data, whenever it's collected properly, sits in silos and nobody can access it. So you can't even benchmark projects against each other. And what's even more worrying is that when it is collected, there was a study that was done by the Arnold Foundation back in 2015. So they analyzed a bunch of projects that had done randomized control trials to measure their effectiveness. A randomized control trial is when you take a project with a certain cohort of people and you run it, and then you take a very similar cohort of people and you don't do the intervention, and then you kind of have an objective way of measuring whether the first cohort is doing better than the second one, and you can deduce from that what the impact has been. And when they did this, so they did a bunch of literature review of projects that had done randomized control trials, and the findings were interesting. In the education sector, 90% of the programs had either a weak effect or no effect at all. And in training and jobs, it was 75%. So for us, that just shows the importance of, one, collecting the data, but then also making it available for everybody, so that you can start looking, basically not replicate the mistakes from the past. That's essentially what we're trying to do. So the way that we're going about it is a DeFi approach. What we want to do is transform, I feel like I should be on this side actually, impact into a social product or a financial product, because if we have a financial product, then there's an incentive. If we turn impact into a financial product, there's an incentive to track it. And so the way that we are going about it is also putting it on the blockchain, because not only are we tracking the impact, but then we make it completely transparent, and then people can start benchmarking all of these projects together. So this is how it works. It's based on, the whole protocol is based on a new financial primitive that we've called an impact future. It's a horrible misnomer. It doesn't correspond at all to financial futures or futures in the financial markets. There's a time-honored tradition in the impact space to call stuff that it isn't. So we're going for that. But we think actually it's much better. Futures, impact futures are a much better application of the word than financial futures. But anyway, so the way that it works is we're essentially, it's pretty deceptively simple at its core, is that we're matching people who are prepared to pay for impact, but only if it's achieved, with people who are prepared to take on the risk of impact not being achieved. But they obviously want a return on their investment if the impact is achieved, right? So on the one hand, it's a double tokenization. There are impact promises. So whenever someone creates an impact future, they're effectively making a bunch of promises about what they're going to achieve. Finding a home for homeless people, finding a family for foster kids, and all the rest. Hi there. And then on the other side, there are what we call credit tokens. And credit tokens are a claim on the money that has been put in to buy the impact promises. So I'm going to give you a high-level user flow because it's easier to explain it that way. The most basic use case that we're working on at the moment, and that is very inspired by things like social impact bonds, if you know how those work. It works like this. So you have, first of all, you have a social organization that creates an impact future. As I said, that means that they create a bunch of promises that are costed. We will receive, say, £1,000 every time we find a home for a homeless person. In exchange for, or when they create the impact future, they also receive impact credits. So they've created impact promises and they receive the credits. And the credits are their right on any money that's put into the contract to support them in achieving their goals. So what happens after that is that you can have donors who are effectively buying impact promises. So they're putting money in, we're calling this collateral. They say, okay, fine, I'll help you find a home for these homeless people. I'm going to make a donation, but the money is only going to pay out if those people are actually do find a home. And in exchange, I've got some tokens that represent that promise. And I'll show you how that works afterwards, what you can do with those. So obviously the charity needs money up front in order to run its project. Maybe it doesn't, in which case it just goes ahead, and that's fine. If it's super confident and has tons of money, but that's not the case of most charities. So what it can do is essentially do a cash flow financing operation with an investor. So what they'll do is they will sell their credit tokens to investors who will provide the upfront capital. And the way that that works is that, one, if you remember, for each impact promise, there's a certain price to that promise. If I help someone find a home, it's £1,000. So I can sell my credits at a discount to the nominal value. So if I know that each impact credit is going to give me £1,000 if it's achieved, if the promise is fulfilled, then I can sell it for, say, £500. at a 50% discount, which represents the risk of, one, me not being able to collateralize this impact future, and two, me then not delivering on the promise. So if everything goes well, this investor can cash in their credit token for 1,000, having paid 500. Then the organization now has money up front. They can run their project. Every time they achieve a goal or they fulfill one of their promises, they can submit proof to a validator. And I'll tell you how. If you have questions, by the way, don't hesitate to jump in. Oh gosh, there's one straight away.
Just on the valuation of that credit, you were saying that you've got a 50% discount. How do you value? This is the whole thing.
Yes, so I will get back to that in a sec afterwards, because that's a very interesting question. For the time being, let's assume that we come to a private agreement on the value of that. So there's a validator who validates the goals. It's an independent validator. We'll be building more. We don't have markets for that yet. Right now, we're appointing validators for each project. It could be a human or a machine. And when the goal is validated, what happens is that then whoever owns credit tokens, so the charity maybe hasn't sold all its credit tokens and the investors have some now, they can exchange that for the collateral that was put in by the donors. So the donors, when they were making their donation, the funds were locked up in the smart contract and effectively acting as collateral for this impact future. And then what that does is obviously that you have a full record of claims made by the charities that have been validated about how much impact they've made. And all of that is transparent, it's fed back to the donors, and anybody can go and audit all of these different projects. Yeah?
When the contract is that you're depositing these tokens in and then re-exchanging the collateral, you mentioned that something like having a promise of, say, building one house.
Yeah.
At what point does it actually become unlockable? Is it like...
As and when each promise is fulfilled. So if I've housed one person, it unlocks £1,000.
So the tokens are actually non-refundable. They each represent one.
Okay, so I'm going to get back to that one as well, because we've actually started work quite advanced on a new token standard, which is semi-fungible. Okay. We're calling them fluid balance tokens, just in case we don't get around to it. But I'm happy to answer that question directly afterwards. Any other questions at this point, just on the high-level mechanics of it? Oh. All right, so we've got traction. We're working with quite a lot of organizations already. The one that we're most famous for is the St. Mungo's homelessness project that we ran back in 2017. Since then, we've rolled out a bunch of other pilots, and we are now scaling up progressively, slowly but surely, on much bigger projects. So we've started work with Cancer Research UK. We're about to launch 2 projects in the homelessness sector with Emmaus and Fusion Housing. One's renovating a homelessness center. Actually, this is what it looks like. It works just like I actually have it here. So it actually just works like a normal donation platform, like if you're familiar with Just Giving. Right now, you can donate in fiat, so it means that we have kind of a semi-centralized back end where we are using a normal escrow agent and tokenizing the donations as e-money on the blockchain. But we've started integrations with DAI, and we're in discussions with a bunch of other stable coins. And then you have a bunch of costed goals. So you can see here, how much it's going to cost to renovate the site, how much it's going to cost to put up the new cafeteria, etc. So that's, and then when you click donate, you just put in your credit card and it works. So that's the main product that we have up and running. But we are also working with now some much more. So all of this is through the Alice donation platform, which you can just go and find on our website, alice.si. But what we've found out over the course of the 2 and a bit years that we've been working on this is that it was really hard to just shoehorn everything into the Alice donation platform. So we're actually working on quite a few custom integrations now. This is a project that we're working on with an impact investment fund called Resonance and St. Mungo's. It's a follow-on project with St. Mungo's. But essentially, it's empowering beneficiaries. So if I can do the demo here. It's one I prepared earlier. Oh, wait. I need to view my tabs, otherwise I won't see MetaMask. So what's happening here is that we are doing with these two organizations, we're creating, here we go, that should work. So we're creating a system that incentivizes formerly homeless people to take control of their lives in a supportive housing environment. So the way that it works is that residents, the fund, will buy social housing, buy the buildings, and then they'll work with service providers like St. Mungo's to provide services to homeless people that are put into this affordable housing. But instead of St. Mungo's getting paid every time, the actual payments, part of the payments, will go to the tenants themselves. And in this demo, for example, it's a job training demo, so we're actually doing a load of peer research at the moment amongst various cohorts of people within these buildings to figure out what are the incentives that work best for them. And some of them are non-financial incentives. So here the demo I'm going to do is actual money, but some of it will be credits for childcare and all kinds of different things. So we're actually going through the process of asking the beneficiaries themselves what they want to achieve. And the demo is really simple. So once someone has been onboarded, they can make a claim every month, for example, that they found a job, and they can prove that they have a job by putting up a payslip, for example, here. And they have several options. Either they get money up front into their wallet, or they have a little bit more money that they can put in a savings account that will go towards independent living. And that they can only access if they can prove that they've moved on to independent living. So let's say I want to do that here. Ooh, interesting, MetaMask in full screen. You can see that the payslip has been submitted here. So while we wait, this is on Rinkeby, so it should be quite quick. But you see that they've already made a bunch of deposit savings. There you go, it updates. Bonus awards are there. They have their full history. But the important thing is also for everybody involved, you can see all of the stats of this project in real time. So how many jobs have been created, or how many people have found jobs, how many tenants have successfully moved on, the average months until tenants move on, etc., etc. You can splice this in any way you want. We obviously don't expose anybody's personal details, so they're just numbers, 1, 2, 3. Ours is, the one that we've just done is this one, so you can see that the light green is them actually making the claim, validated claim for the job. And then we have other cool little tools like Tappy. So we did this as an integration with Scale. If you don't know Scale, they are an elastic sidechain. Yes, sorry.
Just on the wallet, like when I saw MetaMask come up,
yeah.
You're not getting these housing people.
No. No. This.
What's your ID in your wallets?
So the proof of concept is directly on the blockchain, on Rinkeby, actually. When we actually build the products, part of what we're going through at the moment is to figure out how the beneficiaries would like their the actual service to be, or the payments to be made. So it could be through a community center computer, it could be through an app, it could be through other things. If you look at the main donation platform that we have, you don't actually need to do MetaMask. There's a transaction relay in there that allows us to manage things. It's not ideal because it's semi-centralized, but for a mainstream population or a vulnerable population is probably the best compromise for the time being until everybody's up to speed on all of these things. Yeah. But Tappy, for example, solves exactly that problem. So Tappy is something that we built for a free school lunch program that hopefully will be deployed in Uganda. It's stalled a little bit, but we still have the proof of concept, so I can show it, which is awesome. Here, the idea is that we want beneficiaries to self-validate when something has happened, again, like this one, but make it super easy for them. So instead of having to have their own crypto wallet, especially as these are kids, we want them to have something super simple like an NFC-enabled wallet. So a wearable or a pin or a badge. I'm going to use my Oyster card just for the demo purposes. So this is actually an app on the Android, on the Google Play Store. What happens is when they show up in the morning, these kids, you can see that there's a bunch of dye. S dye is X dye on Scale. So you can see that there's a bunch of money, not much anymore, because I've done this demo many times, that's available. But so when kids come in the morning, the teachers have to have an Android phone at the moment, but they're the only ones who need an active internet connection and an actual smartphone. What they can do, actually, do you want to do the child? I'm just going to register you in the morning. You just tap the back. There you go. Let me check that I choose a kitty key, whichever one you want.
Adorable.
And hopefully, press that again. There we go. Hopefully in very short order, this will load the card. The internet is a bit crap, but let's see. I did the sound effects. It was 4 o'clock in the morning at a hackathon. All right, so now your card is loaded. There you go. That's appeared already on the dashboard. And then when you want to go and have your lunch at lunchtime, all I need to do is tap again. You need to go with the same kitty key, which is like an added security measure, which we'll have to test out with kids to make sure it actually works. And then that should do the same thing, hopefully. And then you'll see that the money has been taken out of the contract. While that's happening, you can trust me, it happened on the first one, so it happened on the second one. It's a bit slow, but that's the internet. There you go, boom. So those are the kind of projects that we're working on at the moment. Any questions on that? Yeah.
I'm curious about how the product changes the behavior of the charities, and specifically the people in the charity. And the reason why I'm asking is, assume charities kind of operate where, again, assuming you have someone probably with an academic background, who can then motivate for a grant, does a bunch of work, and then prepares a paper saying, hey, this is how your money was put to good use, please give us more money.
Yeah.
And it seems that with the Alice product, that role might be changing from perhaps that way of working to one where it's more almost like a hedge fund manager in the sense of making strategic calls on what's going to work and what's going to return.
Yeah.
Do you see that change happening, and is it a good thing?
So it's a really interesting question, and I'll jump straight then into what we're working on in terms of the investment side of things, because all of these things were donations based, right? All the demos that I've done, and actually they're still built on the old protocol that is not based on the tokenized promises and the tokenized investments. This is something that we recently developed just a few months ago, that we're going to roll out in the next 2 or so months. And it comes from exactly the type of work that we were doing. So initially we wanted to just do a simple escrow system for donations, and then anybody could build their investment side of things on top. But after a lot of market research, talking to impact investors, we found that that's not how they work, and we needed something way more flexible. So now we're working with Ashurst, with Clifford Chance, to actually create these compliant systems. Normally with a social impact bond, you need to create a whole legal structure, separate legal structure, which is a special purpose vehicle, which is used to ring fence liabilities and has its own accounting and things like that. And actually you can automate a lot of that with smart contracts. And I'll do the demo in a second, but basically you just drag and drop clauses. It creates the legal contract and it deploys the smart contract automatically. And so what we're going to start seeing, to answer your question, hopefully, is what kind of structures are being set up, what kind of projects people are interested in funding as well, which might create some unintended consequences, unintended biases. It might be that some projects, institutionals don't touch with a barge pole, but thankfully, then hopefully you have the community involved. And to answer your question, there's then the whole question around, well, what's an outcome? How much is an outcome worth? What should we be funding, and all the rest? And this is where, I'm just going to jump a couple of slides. This is where the Alice stack comes in. And so what we're starting to work on, and what others are actually starting to work on as well, is a bunch of services and applications built on top of the core Impact Future building block to determine just that. So one of them that we're quite advanced on, but probably won't be published until the end of this year, is a decentralized due diligence service that allows everybody to systematically go in and analyze projects according to multiple criteria. If you're familiar with token curated registries, it's kind of based on that model. It's a slightly evolved, sophisticated model of that with multiple criteria. But that is exactly the point that we're trying to get to. So we want to empower anybody to be able to see almost at a glance. We'll see how it's implemented in the end. But whether there's a real need for this project, whether the cohort is well set up, whether the validation system is well set up, whether the financials make sense. And then you can start benchmarking all of these things. We also want to integrate, TCRs are great because it allows you to contest or kick off projects from a certain list if new information appears. So if there's new information about something not working or creating unintended consequences, like the Tom's Shoes story, where you buy a pair of Tom's shoes and then they send shoes to people in need in developing countries, and what you end up doing if it's not done properly, which is what Tom's Shoes did at the beginning, is that you destroy the local cobbler industry. So obviously people are getting shoes, but you're destroying the local economy, which you don't want. And then we'll start seeing, if you combine that with the actual contractual clauses and the actual legal frameworks that are being used, then we'll be in a position to start seeing how that shifts. A lot of people are going to be actually actively right now pushing for that shift to happen because arguably, one of the best things that happened to the social sector, I say arguably because there's the other argument, right, on the other side, but arguably one of the best things that's happened is impact investment coming into the social sector. It's doubling every year. It's still relatively small in terms of capital markets. It's about $500 billion worth or assets under management at the moment. But these are investors that have a double bottom line. So they want to make a financial return, but they also want to make a social return. And in order to get a social return, you need to measure it. And so there's this whole accountability piece that's coming in. The problem with impact investing is that it's just extremely expensive. As I said, you need to set up a special purpose vehicle. There are no synergies. Everybody's data is siloed and things like that. So that's why we're working with Ashurst, with K3 and a bunch of financial intermediaries, impact investment funds to streamline everything through smart contracts. And if everybody has transparency over what the outcomes are for any given cohort population in any given geography, you can start comparing projects and seeing how effective they are, but also whether they're efficient as well, in terms of how much money they're getting in. But you can also start seeing what the different frameworks are, because there's an actual imbalance of power in many situations between funders and charities or NGOs, and between NGOs and beneficiaries as well. So what we're hoping is that we can put in place the systems that will make all of that really clear and transparent. So you might only want to donate to or invest in a project that's done proper beneficiary surveys to actually aggregate their needs and make sure that that's properly set up, for example. So sorry, that was a really long answer, but does it come close to an answer to what you were asking? Okay, great. Any other questions at this point?
Sorry for the question. Can we just use the handheld mic?
Yeah.
Thank you very much, because I'm recording.
Thank you.
No? Well then, no.
Next time.
Awesome. Right, and so back now to the question of the tokens. There's a technical challenge around the credit tokens. And the technical challenge is that when an outcome or a promise is fulfilled, if you remember, that unlocks a certain amount of collateral that's been put into the contract through donations, for example. And you then have two ways of managing that with the current token standards that we have. Either it's fully fungible, in which case it's a first come, first served. Whoever has the credit tokens and comes in first, because they're fungible, can just take out whatever's been unlocked before everybody else. And if you're slow, you're at the back of the queue. And the further you are at the back of the queue, obviously, the less chances you have of collecting money, because maybe your charity only achieves the 80% of the outcomes rather than 20%. But if you're slow, you're going to be left holding the bag. Problem with NFTs, so non-fungible tokens, is that you would need to buy an entire credit token, and you would that would then allow you to go and take out whatever has been unlocked for that specific promise that's been made, which is again suboptimal, because if you're left holding the wrong credit tokens, then you just don't have access to your money. So we want a fair system where whenever something's unlocked, all of the credit token holders can go in and get just their percentage of what they're having. And actually, Graham's here from Gnosis. We're a Gecko grantee, so we're part of the Gnosis ecosystem funds, and we've done quite a bit of work around their conditional tokens, which are used to power prediction markets, but which we find interesting as a signaling tool to layer on top of the Alice protocol. But that was a big inspiration for how you handle, because it's also all about having claims on some kind of conditional collateral, to build these fluid balance tokens. And what these fluid balance tokens do, as you can see from the cool GIF, took me hours to do, no it didn't, is that basically you can, so they're semi-fungible tokens in the sense that you can buy fractions of a credit token, but the balances will be merged. And it's important to keep those balances in mind, because when especially if you're trading these tokens and buying and selling them and all the rest, you actually want to make sure that when you're buying a token, you know whether the claims that are available to that token holder have actually been made or not. Because it might be that they sit idle for whatever reason. They want to collect it at the end or whatever. So you want to be able to quickly merge the balances and keep them together. So that's what we're calling fluid balance tokens. We're pretty well advanced. It's a little bit hidden on our GitHub page. I'll give you the link, and if you're interested, I can point you to the actual repo. And we're going to be putting out a paper on this relatively soon. I don't know how much time I have left. Right, just one last word before maybe I stop. So, yeah, there's a really complicated graph. But I wanted to show you another example of how you can use impact futures that aren't necessarily related to a donations situation. One simple one is using tax money and tracking the effectiveness of your tax money. So this is something that we're doing with a couple of projects, one with the social interest group on a criminal justice project, where again we're providing incentives to people who come out of jail to do voluntary activities that they wouldn't otherwise do, and that's paid for by the local council of Islington, so that's part of a tender. The other one is something that we're discussing with a couple of CSR departments. This is super interesting, is how do you use this kind of infrastructure for conscious consumerism. So if you buy a product, and actually Providence already obviously are really deep into this, if you're going to buy a product and it makes claims about something, not just about its provenance, but about the actual social or environmental impact that you're making by buying that product, then you want to be able to keep track of that and potentially even get your money back if that fails. Right? So imagine that you go to Starbucks in the morning. It's not happening yet, but this is our vision of the future. You go to Starbucks in the morning and you buy a cup of coffee, and it says this cup of coffee is helping 10,000 hectares of land in Colombia to transition from cocoa production to coffee production. And you have a little QR code on your mug that you can scan, and when the actual hectares have been effectively transitioned and validated as such, then your money the farmers directly get your money. But if it doesn't, you get your money back. And so this is the kind of system that we can set up with impact futures. A big problem with crop substitution programs like this is that the government will say, we'll create incentives for farmers to actually do that, but they won't ever pay them because, government. So in this case, what the government could do is create the impact futures itself, airdrop the credit tokens directly on the farmers. So they already have the tokens and hold the tokens, and they know that if they actually do their switch and that it's verified, they will have access to that money directly. And the promises themselves can be passed on. So when they sell their coffee to a wholesaler, the wholesaler can pay that premium, the impact premium, and can pass that on down to Starbucks, who can then pass it on down to the end consumer. So we're starting to look at some really interesting projects around that. This full implementation is nowhere near being done, but that's kind of what we want impact futures to do. I talked about the stack already, and so just to summarize, the impact future framework is going to be rolled out in the next couple of months. We're going to scrap the current infrastructure for Alice. It's going to be totally open, so instead of trying to shoehorn everything into our donations platform, which is what we were trying to do up until recently, anybody will be able to create their own impact futures. So we're looking to see how else people can do it, maybe promises for ICOs, I don't know. But what we really want to get to is radical accountability, benchmarkable data that makes sure that if there is an effective project out there, then it can scale, and it makes it easy for people to identify which ones are the most effective. Generate a huge increase in social funding, make all of these projects investable as well. So we could end up in a situation where you have credits like carbon credits, but for anything. So you can offset anything with these things. And because everything is transparent, you can learn from what works and what doesn't from other projects. Every single project will reinforce the others. So thank you very much. These are all our details. Thanks. Thank you. Any other questions? Yes. Sorry, that was a lot.
I imagine that one of the biggest problems is like this last mile problem, as you said, with like governments, for example, not paying the actual farmers who end up participating in this program. Who are the most effective validators right now in your scheme, and like how are you thinking about which ones to include in different programs? Are you pushing all that to like the people who actually create the impact futures, or how are you thinking about the problem? Yeah,
so right now we're taking a very centralized approach, which is that every project that we're running has an appointed validator. So we have, for the St. Mungo's project, they're actually acting as validators for the beneficiaries, and then there's an independent validator, which is a committee of the funders that's validating theirs. For several projects, as I said, it's the local council. So the very first pilot that we did back in 2017, that was the Greater London Authority. With SIG, it's the local council of Islington. And then there are a couple of instances where it's been just another NGO that's been looking at that. But obviously that's completely suboptimal. And what we need to do is build the validator market, or someone needs to build the validator market.
Someone's on it.
Yeah, is that right? Okay, seems like it.
Sorry, what did you say?
You need to, yeah.
I said, he was talking about building the validation market. That's something that we're working on at Providence. We're looking at a TCR approach to verify as validator settings.
Which is fantastic. So because everything's composable with DeFi, we need to talk afterwards. The great thing is that everything can plug in. So what we imagine is that there will be various validator markets out there. Some that might be more serious than others, but everything can plug in as long as it works with these impact futures. What we also need to do, though, specifically for Alice, is a bunch of governance protocols. So you need to be able to contest the decision of a validator. You need, if it goes to arbitrage, then you have to have different ways of arbitraging. So there are a bunch of organizations like Materium and others, Kleros, Aragon, that are working on court systems that can be plugged into smart contracts, so you can reverse decisions. For example, potentially a reputation system for validators, so that when you're donating or whatever, you can see whether they've had any decisions go against them. And that's the kind of ecosystem that we hope to create or reinforce through the use of impact futures. Thanks. Anything else? Yes?
Yeah, I'm just wondering what you think the carbon emission credit story can provide in terms of a cautionary tale for what you're trying to develop. So I was one of the people who raised a very large fund, and we invested in energy projects around the world. And in fact, the credits made these projects investable. We bought the assets, we didn't just buy the credits, so investors had something left over. But when the prices crashed, for reasons related to the financial crisis in 2008 and other things, you know, the markets have never really recovered. And there's really a widespread view that offsets are not a legitimate form of of addressing climate change. I mean, I don't agree with that, but I'm just wondering how you're going to try to keep the credibility of the very complicated system that you're proposing, you know, to keep it robust over time.
Yeah, well, it's a real concern. I think it might be a concern for DeFi as a whole, but our approach is to do it really step by step. So the reason why we got to impact futures in the first place is through these 2 years of experimenting with different projects, talking to impact investors, seeing how they work and seeing how we can plug it in. When we roll out our decentralized due diligence system, impact investment platform, and all the rest, this is going to be very controlled initially, and then open it up as we go along. But it is a market-based platform. You don't necessarily need impact investment for every project, because the way that the impact futures work, you can just set them for half of the collateral, for example, to be unlocked immediately as a charity. So you can just take that, and then if you completely fail, then the donors will only get half their money back, but at least you have the working capital up front. So there are all kinds of different ways that we can mitigate what the funding issue might be for charities. But obviously, impact investment is a big plank. It's growing. It's doubled year on year this year. And it's just growing more and more, so we hope that we can bring in a lot more assets into, or a lot more money and financing through that. But whether it's going to hold up in a financial crisis or not, and what the impact might be, is a bit of an open question. But I'd love to talk to you about that afterwards. By the way, I didn't say, but we are in the middle of a funding round ourselves, Alice. So if you have money, yeah, talk to me. But yeah, it's a very interesting question.
How much are you trying to raise?
I can tell you that offline. Any other questions? No? Any potential collaborations? We're always looking for partners. We actually have another donation platform that's focused on Islamic finance that wants to build on top of what we're doing, which is weird because it might be a competitor to our donation platform, but we don't care because we just want as many communities and as many funding solutions to be built on top. So if you have anything that you think might be interesting, please come and talk to me afterwards. Thank you so much.